If you could elaborate more on what Babylon Finance is and how does it work?
I created this small smart contract, this Telegram group, and I told my friends, okay, just deposit the money here, and we as a group, we will allocate it and to try to generate alpha for us as a group. And this experiment went really well. This was like the end of 2020. Ethereum was going up quite nicely, and then we were able to return around 1,000% in just a few months. So everyone was quite happy. And then the next step for me was, okay, how can I take this idea of being able to share investment ideas and execute them as a group to not just my friends, but everyone out there. So it's like creating a platform that allows people to create these investment DAOs or investment clubs that we call gardens to invest in DeFi together. So it's difficult to explain. The best way to see Babylon is as a DAO that is made of many investment DAOs.
Hello, everyone. My name is Ben, and as usual, I'm the host for today's podcast. Today, we have Ramon Recuero, the founder of Babylon Finance, a community-led asset management protocol. Welcome to the podcast, Ramon.
Thank you. It's really great to be here.
Cool. So, before we begin, I always ask, could you share a little bit about yourself and your background, and how did you get started in crypto?
Thank you. Yeah, I'll try to make it short and make it interesting for everyone. I'm originally from Europe, but then I moved to the US and I completed my master's in computer science. Then eventually I was really drawn to the startup world and I started a company in the gaming space. This was user-generated games around 2012. So it was a trivia network where users could create games, for example, out there of the Rings, and ask questions about which actor appears in this scene or what happens here, and then other people answer. But the main point was that it was community generated, and it went really well. We got to more than 500,000 active users, monthly active users, and then eventually I got acquired by Zynga, the network that used to work on mobile games, Facebook games like Farmville, Works with Friends, and so on. And I worked there as an engineer for a couple of years. And that was one of the first kind of things that drove me to crypto later, because when I was at Zynga, Facebook changed their algorithm and then kind of plummeted Zynga's revenue overnight because they changed the way the Facebook algorithm surface ads. So it's basically killed Zynga's revenue model. And then you realize quite clearly that if you are building on a platform that is not yours, you can be taken off at any moment. So building on a neutral platform, yes, it became really important to me that it was like a must-have. Then after that, I worked for startups for a long time, one startup in Seattle. Then eventually I joined Y Combinator, where I was helping other founders and mostly already in crypto get started. And then I also joined Open Zeppelin, one of the creators of the ERC20 and one of the best security firms in crypto. I worked there as a chief of product for a year. And then eventually I also worked at Google, leading a team in the cloud organization. And then starting the beginning of last year, I started working on Babylon.
Yeah. So, I already kind of hinted what Babylon is, but, if you could elaborate more on what Babylon Finance is and how does it work?
Yeah. And it goes back a bit to my personal experience because I've been in crypto for a few years now, since 2015 or 2016. Mm-hmm. And, crypto interests me from a lot of different viewpoints. One of the aspects is what I mentioned as an open development platform. Another one is this open money that is not censorable. Because, for example, while working at Open Zeppelin, I was able to experience living in Argentina for a while, and then it becomes really obvious that that the money in a bank account is not necessarily yours. Luckily, in many Western countries, we take it for granted, but that doesn't happen in all the world. And then in those places, you realize that this is a really needed construct. So, so anyway, after being in crypto for so many years, I saw so much opportunity, and I was always the friend in my friend group that couldn't shut up about crypto. And I always telling them, it's like, oh, you have to do this, you have to do that. Nobody cares. Then eventually, when when everything is really fraud, everything is at the top, everyone wants to go in, and then they invest at the worst possible moment. It's like they ask you, it's like, oh, should I invest in Cardano? Should I invest in this? It's like, oh, no. But and then they don't want to hear about it during the bear market like this, because everyone gets burned. So I created this small smart contract, this Telegram group, and I told my friends, okay, just deposit the money here, and we as a group, we will allocate it and to try to generate alpha for us as a group. And this experiment went really well. This was like the end of 2020. Ethereum also was going up quite nicely, and then we were able to return around 1,000% in just a few months. So everyone was quite happy. And then the next step for me was, okay, how can I take this idea of being able to share investment ideas and execute them as a group to not just my friends, but everyone out there? Because my other idea was, because the other way to do this is just creating a crypto fund and serving that to clients. But I didn't have any interest of just helping people in Sand Hill Road or in Silicon Valley, another crypto fund, and just, so it's like creating a platform that allows people to create these investment DAOs or investment clubs that we call gardens to invest in DeFi together.
So obviously you hinted that it's an investment DAO, right? But what kind of products does Babylon Finance offer?
Great question. Babylon is also complicated, so it's difficult to explain. The best way to see Babylon is as a DAO that is made of many investment DAOs. So within Babylon, we have these gardens that are our investment clubs, and you can have some that are like really low risk and they just want to accumulate Ether. Then you can have other gardens, other communities that they are super high risk and they're going to do leverage strategies to try to get as much alpha as possible. Then you can have another ones focused on a stable and generating a predictable return. And Babylon is like this collective of all these individual investment DAOs. And then at the end of it, you have the protocol and its token. The protocol basically takes 0.5% management fee of all the money allocated within all these investment clubs or gardens, and also takes 5% of the profits generated through all the strategies. And then this accrues value to all the bubble holders, that is our governance token, but it's much more than a governance token, because Babylon, the idea is like, we want to give ownership to all of our users. So 50% of all the supply, and it's a limited supply of 1 million, we're giving it to all of our LPs, to all of our people that are creating investment ideas, to all the people that are approving investment ideas, because we want Babylon to be kind of like Vanguard, that everyone knows Vanguard, that is, but when you invest in Vanguard, you know, your 401k in the US, you just select the fund that you want to invest in, and then you create a portfolio selecting a few of these funds. The idea of Babylon is the same. You select the communities that match your risk profile and your investment thesis, and then you can create your portfolio by investing in a few of them. But the kicker here is like, you also, by investing in any of these, you get to own Babylon as a whole. So it's like, imagine when you invest in Robinhood, you buy a share, you're also getting a share of Robinhood itself. So, and this is really powerful. So we want to create this platform that helps people create wealth, that in the end is our KPI and our North Star is we want to generate $1 billion in wealth per year. For that, I mean, we need to get first to asset under management around 10 billion or 20 billion per year. So then we can generate that in profits and give it to as many people as possible.
Yeah. So, it's very interesting because nowadays, robo-advisory, this kind of investment strategies, portfolio management is all becoming a lot more common as more people allocate capital to these kind of finance management companies and entities. And so I just want to have you explain, you already kind of hinted about what some of the negatives are. Could you explain like what are the pros and cons of picking an investment down like Babylon Finance as opposed to investing by yourself?
Yeah, this is a great question and we get it asked a lot. So thank you for asking it. Basically, I mean, if you have infinite money and you have infinite knowledge, you probably always be better going on your own, because you can trade as fast as you need and even in milliseconds. But what Babylon gives, for example, on Ethereum mainnet is a lot of advantages versus doing it on your own. One of them is gas efficiency. For example, if you want to create a strategy that involves depositing into this pool on Uniswap or SushiSwap, and then use the LP tokens to put them on Curve, and then get the LP token from Curve and put it into Convex, that's going to cost you $1,000. But if you invest with 1,000 other people, then the Garden, that is our investment club, will execute this operation for all of them. And so then you get like 1,000 of the gas costs. So we're basically making mainnet Ethereum viable again. And we're also added on top that on Babylon, you can deposit gas free, because we're even in our verified gardens, that are gardens that have been vetted and approved by governance, we are even covering the gas fee for our users. So people can deposit gas free on mainnet and get advantage, receive all the yield, just gas free. Another advantage is tax consolidation. For example, if you do all these transactions by yourself, each one of them is potentially a taxable transaction. But when you do it with a garden, the only transactions, I mean, this depends on tax jurisdiction, and this is not taxable advice, but in general, you can argue that when you are investing in a garden, this investment club, you are changing your token, for example, DAI, from this token that represents your participation in the club. And then when you exit, you do the opposite. So those are the only transactions. But the hundreds of transactions that the garden does inside to invest in Curve, lend on Compound, borrow on Aave, you don't need to worry about them. So that's also pretty helpful. And then finally, crypto is 24/7, as you know, and it never sleeps. So it's really hard to keep track of all the opportunities. So a community can help all the members share the load and can surface all the best opportunities within the investment thesis of that particular garden. So it helps keep the garden up to date with what's going on DeFi. And then the disadvantages is basically speed. Babylon is made for investment ideas that last from a few days or a week to months or years, but it's not good for really quick trading or nanoseconds trading. So it's not good for if you need to get in and out of the trade in a matter of minutes or even in 1 hour. So it's good for medium to long term trading strategies. So yeah, I would say those are the main advantages and disadvantages.
Yeah, I mean, great overview. And I think most people do not have unlimited wealth and do not have unlimited time. So, that's the reason why investment funds exist. And it makes complete sense that, crypto will have their own version of that as well.
Yeah, exactly.
So are there any interesting stats that you can share about the protocol? For example, how profitable has the investment strategy been for your users?
Yeah, I mean, this changes a lot, as you know, with the market, but I can share a
Yeah.
At this moment, we have like 18 million in TVL, and we released publicly in February this year. So far, counting the bubble rewards that we have given on top, the whole protocol has generated like 1 million in wealth. Then if you take the bubble rewards out, then the protocol, all the TVL has lost only around 1 million, 1.5 million, which you could say, okay, it's a lot. But if you compare that with the drawdown of the market that has come down like 35-40%, you can argue that Babylon actually has protected wealth on average a lot better than the average investor.
Agreed, completely.
Yeah.
I mean, I mean, if you look at alt charts, right, it's about most alts are 80-90% down. I mean, Bitcoin all-time high was like 60% down from 60K. So, it makes sense. You're not expected to be perfect, but protecting wealth, right?
Exactly. And we have some of our gardens are still profitable. This is counting in aggregate, but for example, we have one garden that is called the stable garden and basically focus on generating yield with DAI. And that garden is 5% up on a 5 million AUM, assets under management. So it has generated around 200,000 in profits. And on top of that, all the bubble rewards of our token. So it's around 35-40%. And then we have another garden that is called the Fountain of Youth, that does like an ETH accumulation strategy without caring about the price of Ether versus the dollar. And that one is also up around 3% in Ether, and then plus the bubble is around 10-20% right now. So it depends. There are gardens that are down really badly because they were really risky and they have lost a lot of money in this market.
I'm curious about that because investors can get emotional, and there'll be a lot of people that claim, oh, you ruggers, that kind of thing. I'm trying to figure out, how does Babylon manage community expectations? None of this is confirmed 100%. Do you have to deal with issues like that all the time?
Yeah, I mean, first, what we say really clearly is that we ourselves, we don't manage any strategies and we don't manage any of our investment clubs, but we give the tools first for people for creating these investment clubs or investment DAOs. And then within those investment DAOs, people can create the strategies really easily using our no-code UI. And then the cool thing also about Babylon is, like, within an investment club or a garden, people need to approve and vote gas-free for a strategy. For example, one person in this club is going to suggest, oh, I think we should lend this Ethereum on Compound, then borrow DAI and put this DAI on Convex. And then all the members in that garden can approve or veto that strategy. If it gets approved, it will receive capital. So in a way, all the members kind of share the load. So if they have approved that strategy, then it's also partially their fault. So I think that has helped with issues. But and then again, our goal is to give all the tools for all the strategies. So we integrate with 15 DeFi protocols like Carve, Convex, Aave, Compound, to try to give them all the tools to create the strategies that work well in a bear market and in a bull market. But then it's, of course, up to the individual strategies and individual investment thesis, and you need to pick carefully which ones are the ones that fit your use case. We try to, for a few of them, we have a vetting process, and this is what we call verified gardens, and there is a governance process to do more due diligence and make sure that what the people that are running the garden are saying is true, and then to offer protection and to help discovering, because we have around 100 gardens and we have now like 4 verified gardens.
For our viewers' sake, actually this podcast was scheduled to air 1 or 2 weeks back, but that so happened to be the UST depegging event and the Luna catastrophe. And so we kind of had to postpone this. And so I want to ask, right, Ramon, like, what was happening at Babylon during that time? And, what actions did the protocol take, or like the investment DAOs take?
Yeah, it was really rough in general, not so because Babylon was affected directly, but mostly because first, there were a lot of withdrawals happening, because at the same time Terra was tanking, a lot of cryptos were also tanking, Bitcoin, Ethereum. I mean, Bitcoin was affected directly because of the Terra selling the reserves. And then when Bitcoin goes down, pretty much everyone goes down. Then everyone panics a little bit. So then there are a lot of withdrawals. So you need to make sure that the withdrawals are working well. So it's kind of like a stress test for the system, because if not, people is like, oh, where is my money? My money is locked. You are blocking us. This is a scam. So it's like, you need to make sure everything is working perfectly. And then one other thing that happened because of the depeg of UST, then actually 1 or 2 days later, Lido and STE started depegging also versus Ether. And that affected us more directly because we had a strategy that in the fountain of ETH that had leverage Ether, because we were lending STETH on Aave, then borrowing WETH, and then lending it again, and doing this like in a loop couple times to get more leverage. And in normal times, this could be a almost risk-free strategy, but you are taking the risk of the depeg. But STETH, I mean, if you assume Lido won't get hacked, every STETH will be redeemable 1-to-1 for ETH after the merge. But this also stress tested it, and we saw the depeg kind of going down to 97%. So it depegged 3%. And then at that moment, we decided to close one strategy because there was a danger of a liquidation cascade. So we worked with the manager of this strategy, and we decided to close it and cut our losses. And then because the protocol as a whole took the decision to protect the protocol, because this garden is like our biggest garden. and
Yep.
it had like $8 million. So we wanted to protect the left tail. We wanted to remove it, and then we lost like 100 ETH on that strategy. But then we took the decision to refund it to make sure all of our users are getting a good experience, and given that it was not because normally we don't, if a strategy loses money, or that's up to the managers, it's not up to Babylon, it's not up to, but because the protocol, we could have let it running, but it was a bit too dangerous and it could have affected the protocol in a meaningful way. We decided to just backstop the loss and then let the garden restart other strategies.
Really interesting to see because on one hand, it's up to everyone's responsibility, but at the same time, there is a Babylon brand stuck there, and it's very interesting. And I think a lot of investors or potential investors would appreciate the kind of action that Babylon took during that time. So yeah, really cool stuff.
Thank you. Yeah, I mean, in the end, I tweeted about this like last week. I think DeFi in general needs to mature, and we are all talking about all the benefits of DeFi, but if we cannot make sure that users are insulated from smart contract risk, from this kind of liquidation events, then anything else doesn't matter. If users lose all their money, it doesn't matter all the other benefits. It's decentralized, trustly, nobody cares. So let's fix that. Let's take care of our users.
Yeah, I mean, perfectly said. So throughout the thing, you raised a lot about human intervention, right? And that's the big selling point of Babylon, because it's people managing portfolios. But I'm curious, in traditional finance, we see the prominence of robo-advisories, automated investment strategies. Is Babylon going into that route? Do you plan to maybe introduce more strategies that involve bots?
Yeah, that's a great question. I mean, the way I think about it is like there is a range of trust, and you can go from a traditional hedge fund that has a manager and you need to have full trust on it. In Babylon, actually, we support quite a wide range, because we let people create even private gardens, so they need to whitelist the addresses that can create the strategies, and only those addresses have the power. Or you can do the opposite, say no, whoever is a member of this garden can suggest strategies, and whoever is a member can actually approve. So there is quite a flexibility there. And then Babylon is actually really automated in the sense that whenever these actions that the DAO and every garden, every investment club is kind of like a lightweight DAO. So whenever strategies get approved, then automatically our system chooses like the best time to execute the strategy based on a slippage, based on gas fee. So in a way, it's already really a lot of robo-advisory but as some of our gardens become more and more mature, we'll provide like more like a structured product, for example, so where you can have like a portfolio that automatically has like 40% on the fountain of ETH, then 20% on the stable garden, then 10% on this long volatility garden, and then 10% park in stables, just lending it at really low risk to create this. And automatically, this product will be like a robo-advisor that is rebalancing and making sure that the weights are maintained.
Speaking of robots, right, there's also this huge thing in Ethereum with MEV bots. Has there ever been any discussions on, pooling a fund together and, hey, let's support this bot and let the bot just make transactions for this garden?
Yeah, unfortunately, there have been a lot of talk, because some MEV bots have hurted our strategies, or have hurted we have also one garden that is our staking mechanic, and we're using our garden technology to dog food it, so people can deposit our bubble token, and then they get like shares of our meta governance, and then they can vote for free. They can. We have a bunch of mechanics, kind of also like the voting escrow model of Curve. Then we also accrue all the fees, kind of like the SUSI swap model. So in this garden, every week uses all the fees collected from the protocol to do a bunch of things, like first buying back some of the bubble to create value for long-term holders, then adding liquidity to our Uniswap pool, like the pair bubble ETH, and then sending some of the money to gardens. So it's kind of like a nice flywheel effect. And then also we have this rare fuse pool, and we're also adding adding stables there to increase the size. And these weekly transactions that we do to pump the hard, that is allocating all the fees collected during the week to this activity, was getting exploited by MEV bots. So in the end, we solved it using flashbots. That is a great way to kind of isolate transaction. Mostly, it's not perfect, but it works pretty well. And then eventually, I think we want to move towards a model where every garden can designate or can configure it to have their own MEV bot, or kind of like a RPC wrap endpoint, so they can isolate themselves from these basically exploiters and from the dark forest that is Ethereum. Because in the end, it's a dark forest, like in the three-body problem. So there are a lot of creatures lurking around trying to take advantage of your transactions.
I mean, I understand. You know, on Nansen, I am a sandwich attack victim. That's my label. So completely get. Now, there's a lot of interesting things about Babylon, right? But what are your thoughts on the industry as a whole? You know, when I'm talking about industry, I'm talking about investment DAOs, and you know, could you provide some context on where it's going?
Yeah. I'll do my best. I mean, from my point of view, because it's like really difficult. If someone tells you that they know exactly what's going to happen, run the other way. You know, I can just tell you what I think is going on. In asset management, in traditional finance, is the biggest sector by far, and it has many trillions in assets under management. What is funny in crypto and in DeFi is like the asset management in total is one of the smallest verticals. You know, you count Enzyme, DHedge, Set Protocol as we're like a drop in the bucket. And I think that's because most of the consumers right now, most of the users right now in crypto belong to the early majority. So they are like quite savvy, they are early adopters, so they prefer to do things themselves. But as the industry matures and we get the late majority in, and then, or even the normal majority and then the late majority into crypto, these people are not going to care exactly what's going under the hood. They're not going to know how to do it. They don't know how the DeFi protocols work. So I think asset management is going to grow and grow in importance. And these DeFi protocols will need to get a lot more user-friendly to be able to capture this new wave of users. So that's how I see asset management. And regarding DAOs, I think it's still early. There a lot of innovation needs to happen in the way they work. For example, coin voting, I think, is obviously not the optimal way to organize and arrange DAOs, but there is a lot of experimentation. So I'm quite confident that this is gonna go really well in the next few years, but it's gonna take time. The way I see it in general, DAOs is like, you know, at the beginning of humanity, you can only coordinate like 30 or 40 people in a tribe that you see each other every day, so you trust because you see their faces. And this up to 50 people, that is what is called the Dunbar number. Then eventually society, through language, was able to coordinate a bit more. But then another big step in that evolution was like the Dutch India Company. That is basically the first company that was created. And then with this concept of shares, that being able to give a piece of the resource, or a piece of the future revenue, a piece of the future value to people that are investing in it, unlock this massive value creation. But then companies that we know, because recently there are more of it, they have a lot of problems. One of them is the principal agent problem, where the shareholders, the incentives of the shareholders are really different from the incentives of the employees and the incentives of the executives. So, and they get broken really easily. One example of that is also in Facebook, you know, where the first users of Facebook in Harvard created a lot of value for Facebook, but they didn't capture any of it. The beautiful thing about DAOs and Web3 projects, or even NFT communities, is like all of the early users are going to be able to have a skin in the game and also capture all the value. So this kind of will solve the principal agent problem. In the end, it's similar to I'm saying the same thing that Moloch used to says a lot. I mean, we have one of the biggest problems of humanity is a coordination problem. And it's like how we get the best people and the most people to work together to solve a problem. And I think DAOs, Web3 tokens, and NFT gives us the primitives to coordinate more people in a better way, and with reducing the trust, and that makes it more efficient.
Covered so many things there, but I think it was so well said, right? Because funnily enough, I've been diving myself into where does value come from, looking at governance tokens, etc. And I think you nailed it perfectly. So thank you so much for sharing that.
Thank you. Yeah, we'll see. We'll see if I know a few. We can talk again in a year or two from now, and we'll see.
Just to wrap up the conversation, and I'm sure Babylon has a lot of plans for 2022. Could you please at least just share some of them?
Yeah, one thing that we are gonna move towards is this vision of insulating users from all the dangers of DeFi. So we're gonna try to be the safest place on DeFi for users to deposit. This week we started going in that direction by buying ourselves coverage on Nexus Mutual, so to protect Babylon. We're also gonna cover specific strategies. Nexus Mutual is releasing a new version in the next couple of months, and then once that's ready, then we'll give all of our gardens, all of our investment clubs, all of our strategies the possibility to decide to insure a strategy whenever they create it. For example, if they create a strategy that lends on Aave and then borrows and then puts it into Carve, automatically the strategy, our UI will ask the user, okay, do you also want to insure it and buy protection for Carve and Aave in this case? And then the user can select that. And then our own protocol, through the heart, through the fees collected every week, we're going to create like what we call the Babylon Shield, and we're going to keep buying more coverage every week to add into our Nexus Mutual and to our Rari Fuse Pool protection. And then we're also going to create this rainy fund for other market events that may happen to try to protect users as much as possible. So this is where we are going. Another thing that we're doing 2022 is going to layer 2. Although for us, as I mentioned, we have all these gas optimizations, so going to layer 2 is not as critical, because I still believe that the DAOs and the biggest value you need, if you are managing like 100 millions or 200 millions, I mean, you probably want to be on mainnet because it's where the highest security is. What we are interested in is in providing access to this investment club to opportunities that may be in other chain. So our strategy for multi-chain looks different than for other projects. So we are not going to just deploy Babylon on all the other chains. We're going to always be on mainnet, but we're going to try to give users access from that mainnet hub to opportunities that exist on other chains. And that's something that we're going to explore also this year.
Hey, it sounds really ambitious, and I hope you guys pull it off. Yeah, we all can agree cross-chain is definitely the future, and it makes complete sense.
Thank you, Ben. Yeah, we'll try our best.
Before we end the session, I always ask, is there anything that you want to share or that I should have asked but didn't?
I guess right now what everyone wants to know is like, okay, have we hit the bottom or not? Regarding prices and the bear market. And a lot of people ask me this. I think unfortunately not. And I think unfortunately, although crypto is not in danger of disappearing like it was in 2016 or 2015, right now there is so much adoption, so many teams building, so much money put in the space. We have even countries taking Bitcoin as a legal tender. So there is no risk of that. However, we are caught in this macro environment that is really tough at the moment. And with the Federal Reserve raising rates so aggressively and at the same time starting QT in 4 days, I expect that there is going to be more pain until something breaks in financial markets, or if inflation comes down to a palatable enough level for politicians to then stop with this and then go back to what they like to do, that is QE, print more money. And then at that moment, once that switch happens, is when I believe the market will start recovering. And crypto, because they are like the farther out in the risk curve, they will recover the fastest. The same way they usually dump the first and the hardest, I expect probably there is more pain to come before we will recover.
Hey, thank you so much for sharing your insights on that. I myself really appreciate it, and thank you for our audience as well.
My pleasure. Hopefully, again, this is not financial advice. It's just how I see it.
I think with that being said, that's all there is for this session. Thank you so much, Ramon, for coming on and sharing your insights.
Thank you. It was my pleasure.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.